But let's welcome in our market master of the day, Krishna Sanghavi, is Chief Investment Officer, Equities at Mahindra Manulife Investment Management. Krishna, great to have you with us here. Thank you very much for your time.
Thanks for having me.
How are things, what are you guys doing at the fund, Krishna? If you can talk to us a little bit about what's the stance like as far as the markets go, because you know, a lot of new entrants in the asset management space, and it's an interesting time to start investing because of course what the markets have done on the way up. So just wanted your overall sense right now.
Yeah, sure. Yeah, you're right. We're in an interesting space. India as a country, asset management as a business has its own potential. Economy grows, earnings grow, corporate earnings grow, individual incomes grow, and you have nice space for where we're in a sweet shop where nominal income for India is likely to grow much faster vis-a-vis rest part of the world. So if you're going to have a double-digit nominal growth, it's a nice sweet spot for everything. The same set of people will consume something, they will invest in markets, and they will have their entire capex cycle from corporate side stroke real estate cycle. So the environment is good. India is in a sweet spot, as I was repeating maybe. What's possibly needs to be taken care of in this journey is the valuation. We right now in a spot where if you really look at the next 5, 7, 10 year journey about how economy is likely to go, and even if you do a retrospect, look at last 15 years, at various points of time, Indian economy would have seen as tilted to one particular segment of markets. But over next couple of quarters or years, the things change and some other set of sector or the economy picks up, and that's in a way you can call it a relay race equivalent, where there are too many sectors, each of them have a right to grow because there is so much interdependency. Okay. If you want to have more car sales, by default you need more steel, and maybe someday more electricity, and maybe someday more need for car loans. So interlinkage among sectors is pretty interesting. So when we were a $1 trillion economy, let's say somewhere in 2006 or so, vis-a-vis today where we are, we've seen enough phases where sometimes consumption takes over the phase of growth. Somewhere it's capex, somewhere it's financials. So we expect something very similar to play out in next 5, 10 years, where almost the entire spectrum is going to grow. One interesting sweet spot which we believe is what markets needs to factor is if you look at core segment of economy, and let's look at, let's not forget the 10 years of reasonably low investment in the space across the spectrum, whether it is metals, whether it is, electricity, whether it's refining capacity. So you had a phase somewhere in, early decade, which was somewhere from 2005 to 2010. A lot of capex got initiated there. Capacities came up, and like these industries are high gestation period, so you just can't create capacity only for 1 year. You have to create for 5 years or so. So a lot of capacities were created that time, and then in the next decade, somewhere from 2010 to 12 onwards till 2022, there was reasonable, let's say, overcapacity stroke underinvestment by corporates. And now where we are today, maybe in 23, 24, you have a situation where the way India is going to grow, you need far more steel, far more power, far more refining throughputs in next 3, 5, 7 years, and a pure data point of already announced capacities tells you that we might running short of capacity somewhere in 27, 28, 29, depending on the end product.
Got it.
So unless the capex cycle starts today, so I think one core theme is economy does well. Core economic sector leads the show through corporate capex or maybe public sector event capex.
The only problem, I guess, that the market is also waking up to right now is of course, there are geopolitical concerns, so that could put a brake on the rally. B, a lot of the internals, right, are not looking that good. Where the crude price is moving higher, gold is moving, is seeing a lot of central bank buying. The US 10-year yield has moved up. Would you be a bit cautious that perhaps time has come for some sort of a correction in the market before the resumption of the uptrend?
Yeah, I think global uncertainty clearly creates a sentiment overhang. Because let's look at it this way. Indian markets are clearly a function of how global sentiments behave. Earning growth is ours, but the risk appetite in a way comes from how global markets behave. So clearly what's changed in last maybe couple of weeks or so on geopolitics is slightly different. Those things do put some sort of I'll put it a speed breaker as a right word rather than a brake. So to an extent, what can happen is, the pace of change possibly can be slightly different. But on a very macro pace, if you really look at, and keeping gold aside for a minute, let's look at crude, let's look at dollar index. They are today trading at those levels where in last 20 years, we've seen those levels always. Like dollar index at 106, I'm sure in last 20 years, we've seen those numbers. Crude at 95 or 90, we've seen those numbers in past, on both up and down. I think the bigger picture is economy. Economy grows, the risk appetite can be driven by those global macro, we can't deny. Coming from a nice base of a fabulous rally of FY24, which none of us can actually complain about. Yeah, it makes sense to be slightly more watchful, and in markets, what makes sense to be watchful of valuations rather than the markets, because economy is going to grow, markets are going to replicate, the pace can vary, but I think if you keep control of valuations, I think a lot of things gets evened out, And volatility in our markets actually is slightly, at the risk of exaggeration because of the intensity of, leveraged participants. I think it's less of economic challenges, it's more of reasonable amount of, derivatives usage, leveraged participation. And as we know, leverage has its own, challenges of how, market forces people to unwind their positions. So I think that can be a risk.
Okay, all right. Hi, Krishna. Welcome to the show and good to see you in the studio. Well, I wanted to ask you your top themes that you're looking at. Before we do that, I just wanted to focus on the markets for just a bit. We have recovered considerably from the low point of the day, and a couple of factors are playing out here. The Nifty bank is hovering around the 20-day MA, which is a crucial mark. We're trading a little below that mark. You'll want to see a bit of a recovery from there. So the Nifty bank should come up for you on the screen. And Reliance Industries has recovered close to around 1% from the low point of the day. So that big boy as well is fighting for the bulls. Explains why now we're down only around 85 points. The SGX Nifty was suggesting a 200-point downtick, but we have seen a bit of a recovery from the low point of the day. And now the number of stocks that are advancing are in the ratio of 2:1. Well, Krishna, you mentioned numerous times that India is in a sweet spot. Maybe in the near term, you have a couple of speed breakers, but the trend is that we're going to do well. So tell us your top 2-3 themes. You've already mentioned, I think, power, steel, but what would be the top 2 themes that you would look at? And if you could, just elaborate a little bit.
Sure. So let's say the core economy is a theme, which we like, and that's pretty much part of our portfolios. It's focusing more on, capacity creation for next, 5-7 years. Other part is India manufacturing, which is an interlinkage to it. Let's put it this way. Those core economy provides the infrastructure support, while the manufacturing is the next story for India. You look at this year, we started with PLI being the word where, the idea is that whatever India is today consuming can actually be produced in India if it's imported, or what the global customer wants, can it be made in India? So you have a nice sweet spot of India manufacturing can come in to supply exports to the world, can come in to, so replace the imports.
Right. So you like the EMS theme? Do you like the steel production theme? Because as you said, there could be a bit of a shortage in the next 2 years or so. Though we have capacities that are coming on stream, demand could catch up and then maybe be turned into a next net exporter as well.
Yeah,
so
precisely. And that's where, I'll possibly say there's a linkage of those two themes, because if India is going to produce something for the world, or India is going to replace import of some other component which is coming from the world, let's look at it this way. Those products were being produced in world by using some component called power, steel, or refining throughput. So, in a way, from a factors of production perspective, a steel which was used in maybe Germany, or, power used in China, whenever those products are to be either replicated or, substituted in India, you will have the same sort of steel or same power or same refining throughput to be consumed. So that's a big piece, I think, which is what manufacturing and whatever is happening on, on this mid-term picture of creating those in-house, because these products are such that you cannot rely on imports. You cannot say, I'll import some of this and then make for the world.
But there is also this renewable, and the source may differ, right? It may change over the next decade or so. At least we're trying in that particular direction. So from an investment thesis point of view, how do you take that into consideration? Or you kind of say, well, that's some time away. We're okay for now. I mean, focusing on traditional sources of, as you said, power, etc.
So clearly, it's a transition and growth combination which India is trying to manage. For a lot of other countries, they are just replacing existing infrastructure with a new capacity, which is renewables, let's say in power case. In India's case, we actually going to grow and parallelly replicate. So our sense is that we will still be using the existing traditional power sources called essentially thermal, let's say, for a reasonably long period of time. Even if you look at very macro picture, maybe India is the only country which actually has a 2070 as a net zero. So very fact you have a 45-year-old runway of achieving net zero, there is a fair chances that we actually going to consume more of those products before you reach a picking point, and from where the reduction starts. Because the traditional is the biggest source of levelized supply option for power, and similarly for petrol diesel kind of fuel, if we going to grow, we will have to use those factors of production. So in a way, it's a replacement of somebody else. So I'll say yes, transition is a must. Right steps are happening on that front. So parallelly, every utility is investing into renewable as well as in thermal.
So when you talk about transition, right, we have a very interesting discussion which is lined up in a while from now about Elon Musk coming to India, sort of setting up a plant and, signing up with the Tata Group, etc., for the semiconductor plant and all of that. But I wanted your thoughts on how to approach this, right? EV adoption is a big focus area for the government, but unfortunately, things have not picked up as much as they would have liked. So from a stock market angle, how are you looking at it?
I think clearly EV or any such technology in the early phase is going to be more driven by narrative.
Correct.
The ability of these players to scale up is a function of their own ecosystem of vendors. OEM cannot suddenly say I'll produce X quantity of the end product because my ecosystem is not in place.
Correct.
So it takes time, and that's where we are. I think EV as a sweet spot. Again, it's something which we following the world. Other countries possibly started slightly ahead of us, so they on a slightly higher curve of EV adoption.
No, but a lot of these stocks have rallied. I mean, Tata Motors is at 1,000 rupees now. So for someone who's perhaps not participated in this rally yet, does it still make sense to, jump onto this EV adoption theme?
Conceptually, yes. But again, the same thing, if we are in a net zero, we have a situation where EV need not be the single biggest driving force. Existing vehicles still needs to be sold. Maybe hybrid, which is another technology coming up, can be relevant. But yeah, I think if you're really investing for that medium term, long term, why not EV also?
Okay, all right. Krishna, final question then from my end before we let you go. We have taken on board all the positives. And as you said, India is well placed. But important to put some caution as well on board, right? So as you said, crude we have seen at these levels, the dollar index we've seen at these levels. You're not looking very perturbed with regard to the global picture. What's the key risk then to this big Indian stock market rally that we've seen and the booming Indian economy?
Sure. So I think there are two clear risks. One clear risk is what happens to the world. We are very much a part of it. We have to be cognizant that Indian markets are perhaps trading at among the highest valuation vis-a-vis any other global markets. So, so valuation, and we've seen over time, valuation requires positive sentiments.
Yeah.
Higher the valuation, you need more higher positive on sentiment front. So we need to be aware of. So same variables called dollar index, called oil price do matter. What I really meant was that those things are a cyclical where some portfolio stance can change, some sector allocations can change. But it's not that, they are always in a one way up and down. It's a cyclical behavior of those, global indicators. Second worry in the Indian context is the expectations. I think expectations are so strong among investors that, so one is on the earning growth itself. Expectations are high in terms of ability to do much faster. And second part is, in a way, the belief that because nothing much is going to go wrong, let me take a leverage route to participation. Because a lot of people think if the certainty factor is, it's like, how you drive on highway, right? The moment you see an open highway, you bound to drive at 100 or 120.
The complacency factor makes.
I think complacency over expectations is what investors typically should be careful of.
I think the street heard the number of times you said sweet spot for the Indian markets because the market has recovered from the lows and there's definitely some dips are getting bought.
Yeah, it is a time frame, honestly.
I understand that. Yeah,
I think what you said, right? If you zoom out a little bit and extend the time horizon, then some of these other things matter lesser. The impact is becomes.
We've seen $90 in 2008. Crude, right? So it's not something new. It's just at that point of time, what changed for India? Maybe currency depreciates to adjust those impacts, and some other set of sectors can overtake leadership, and those things do play out in economy, and that's why like this the concept of profit pool participation.
Yeah.
Too many sectors, each of them benefit.
None of us want to remember 2008 because of post that, of course, you had that $90 crude and you saw what happened with the markets as well.
Yeah, but then we'll see what happened after that.
Yeah, after that there was a big recovery. Got it. The time frame is important. Well, thank you so much for joining us. Appreciate your time here on CNBC-TV18.
Thanks.